interrupt. Not to interrupt, please, but hold your questions until the very end. Thank you. So I'll stop sharing, and Brooke, please go ahead and share your screen. Oh, you're muted. Brooke, you're muted. Catherine, can you unmute? Okay.
Got me now?
Yeah, you got you. Yeah.
Okay, thank you, Maya, for the introduction and the invitation to speak about diamonds. And good evening, ladies and gentlemen. And I wish you all a happy holiday season. And I hope this year you can all plan some nice gatherings in these crazy times. This is a forward-looking statement, and I'm hoping that if I say anything crazy, it will protect me. First, I'm going to talk about the Canadian diamond business, which is really the best diamond exploration story out there. An extraordinary business was created by geologists, mining engineers, enthusiastic investors with the support of communities and the government. I'm then going to talk about the diamond market and some thoughts on the challenges and opportunities related to diamond exploration. Past summaries of the Canadian diamond business. A number of you remember that in December of 2015, Casey Hetman gave a great talk at the Kimberlite Cluster. He summarized the exploration history, deposit geology, and talked about some opportunities for exploration and development. In January of 2017, I published a paper for the Society of Economic Geologists newsletter where I summarized exploration history, mining statistics, and many of the benefits that the Canadian diamond business has provided. So, needless to say, in 2016, there was great optimism in the air about the Canadian diamond business. 2016 was the 25th anniversary of the discovery of diamonds in the NWT, and there had been 18 years of diamond production. 2016 saw 2 new diamond mines open, Gaucho Quay in the NWT and Renard in Quebec. The NWT economy was booming from diamond mining. Supply-demand fundamentals for diamonds looked good, and everybody said dramatic price rises for diamonds were just around the corner. There were some undeveloped resources and exploration potential in Canada. And there were some active exploration programs and many people in Canada that were trained to do the work that needed to be done. Fast forward to today, there are some storm clouds on the horizon for the Canadian business. A lot of it can be blamed on COVID-19, but there were some troubling signals before COVID hit. One of them, demand is yet to exceed supply, keeping prices down for a number of reasons. Midstream bottleneck, COVID-19, and some problems in India, to name a few. And Akati, one of the things I didn't mention before, though, is that in 2016, Dominion Diamonds had announced their intention to develop the J-pipe, a large kimberlite pipe that would have taken the life of Akati into the mid-2030s. Now, they put development of J on hold, and this summer, Dominion Diamonds, the operator at Akati, declared bankruptcy. Diavik, another world-class mine, will be closing in 2025. And the Renard and Gaucho Quay mines are meeting their production targets, but they're not meeting their initial revenue projections. And there's very little exploration now, and there have been no recent economic diamond discoveries in Canada. This map shows the distribution of kimberlites and laprites in North America in 1990. On this map, pink represents the best interpretation of Archean basement, the best places to look for diamonds. You can see on this map, in 1990, there were more kimberlites and laprites known in the United States than there were in Canada. A lot of the diamonds that have been discovered around the southern margin of glaciation in the Great Lakes area created a lot of enthusiasm. Kimberlite discoveries in Wyoming, Colorado, Michigan, Montana in the 70s, 80s sparked a big big diamond rush in the United States. In fact, I estimate that over US 200 million was probably spent on diamond exploration before 1990, and over 100 kimberlites and lamprites were discovered. I got my first job in geology with Exmin Corporation in 1982. I was sent to the Upper Peninsula of Michigan, or the UP, and there was a diamond rush going on there. And 20, 30 kimberlites were discovered, and at that time it was exciting and crazy, and safe to say that we thought that one of us would end up finding a diamond mine. All the US exploration covered a lot of ground, and it was without the benefit of recent Canadian experience. So some of it may not have been the most efficient exploration. People worked in the shadows. Everybody tried to keep a low profile. There were no Northern Miner articles and very, very little publicity. Been 2 attempts at diamond mining in the United States. Kelsey Lake in Colorado was operated sporadically by Howard Coopersmith between 1996 and 2001, and it produced about 11,000 carats of diamonds. There were some nice diamonds, and they got a premium price because they were sourced in the US. Prairie Creek, a lamprite in Arkansas, produced about 90,000 carats of diamonds before 1950. Now, the lamprite is the center attraction at the Crater of Diamonds State Park, where people can go look for their own diamonds. And in fact, in September, somebody found a really nice 9-carat stone, a visitor to the park. I went there once to look for diamonds, and they have water, and I took screens and a pen, and I worked like crazy for about 4 hours, and I didn't find anything. So this map shows the distribution of known kimberlites and lamprites today. In red are all the kimberlites that have been discovered since 1990. The discovery of diamonds in NWT by Diamet, BHP, and Stu Blussin in 1991 ignited a diamond exploration rush, the likes of which the world has never seen and will probably never see again. It's resulted in the discovery of over 900 kimberlites, and 7 mines have been developed since 1998. Gaucho Quay, Diavik, Snap Lake, and Akadi in the NWT, Jericho in Nunavut, Renard in Quebec, and Victor in Ontario. One thing to note, there have been no published discoveries of kimberlite or lamprite in the United States since 1990. And there's never been a lamproite discovered in Canada, as far as I know. So after the discovery of diamonds in 1991, diamond fever hit Yellowknife in Canada. The announcement of the discovery was buried on page 13 in a small article of the Northern Miner on November 11, 1991. There were a couple more articles in 1991, but the diamond discovery really wasn't big news. People were still trying to figure out what it all meant. But claim stakers were busy staking like crazy in the dark Arctic days. Investors that normally invest in Canadian junior companies on the Vancouver Stock Exchange were trying to figure out what it all meant. They didn't know anything about diamonds. In 1992, the Northern Miner started a diamond page that was devoted exclusively to news about diamonds in Canada. Some mining stock analysts also got in on the play. One who got in really early was Bob Bishop. In mid-1992, he published a remarkable 54-page analyst report where he talked about the frenzy in the NWT, the world diamond business in general, and kimberlite geology in an effort to educate investors so they could understand what they were investing in. In mid-1992, an analyst at Pacific International named John Kaiser published a report where he listed 35 publicly traded exploration companies with exposure to the NWT diamond play. Think about that and think if that could even happen today. The discoveries announced in 1991, And within 6 months, you got 35 companies looking for diamonds. The initial claim block acquired by BHP, Diamet, and BUSINE was 450,000 hectares in 1991. In 1992, about 5 times that amount of ground was staked, centered on the Lochtergrad, is the Point Lake discovery. 93 and 94, staking continued, mostly moving north into Nunavut. By 1995, almost the whole Slave Craton had been staked, and there were exploration camps everywhere. By 1998, people started dropping ground, and hundreds of kimberlites had been discovered in 6 years, including the 5 districts that would ultimately host diamond mines: Diavik, Akati, Jericho, Gaucho Quay, and Snap Lake. I know this is a trip down memory lane for a few of us, but I'm hoping it's new to at least a few of us. Most of the initial few years of exploration activity was centered in the Slave Craton of NWT and Nunavut. But geologists at the big companies and little companies were prognosticating about where the next diamond discovery could be made. There was lots of unexplored geology in Canada, just like the Slave. In Alberta, there were 2 big staking rushes. The first in 92 that really didn't result in any discoveries. And then in 97, Ashton discovered the Buffalo Head Hills district, and over half the province was staked. About 50 kimberlites ended up being discovered, and a few of those kimberlites had economic potential. In Quebec, Ashton discovered the Renard cluster in 2001, and that ignited a massive staking rush. Not very much was discovered there except the Wamidji group of kimberlites. Then exploration started moving east into the Eastern Arctic in the late 90s and early 2000 with big reconnaissance exploration programs supported by helicopters by a lot of companies. Then the companies, once they got a sniff, would acquire large prospecting permits. And that led to a lot of discoveries in the 2000s. Churchill, Aviat, Darby, Amaruq, Nanook, Nauyet, and Chidliak, just to name a few. It's estimated that about 3.9 billion Canadian dollars was spent on diamond exploration between 1992 and 2019. Most of the work was done in remote areas supported by helicopters, Twin Otter aircraft, Hercules aircraft, and if you were real lucky, a winter road. Esker sampling led to the discovery of the Renard cluster of kimberlites in 2001. In 2004, a 600-ton bulk sample was collected at Renard that was supported by C-46 aircraft that landed on a lake ice strip. This photo here shows core drilling at Chidliak and Nunavut in 2010. And here you can see 3 large diameter reverse circulation rigs collecting about a 2,000-ton bulk sample at DO-27 in the NWT. It's about a 2,000-ton bulk sample collected by Peregrine. So this table breaks down diamond exploration expenditures over the last 40 years or so in Canada. Between 1988 and 1991, 22 million Canadian dollars was spent. The peak was between 2001 and 2010, when over 2 billion was spent. You can see this decade, expenditures have decreased about 865 million between 2011 and 2019. And I estimate that 40% or so of that 865 was on 4 projects. Renard, Kennedy North, Fort Alacorn, and Chidliak. So you can see activities decrease quite a bit. And I venture to say there's not a lot this year. So all that exploration has made Canada the third leading diamond producer in the world by both volume and value. In 2019, Canada produced 1.76 billion US worth of diamonds, 19.35 million carats. About 243 million carats of diamonds have been produced in Canada since 1998. When you tell people that Canada produces more diamonds than South Africa, most people don't believe it. One thing that resulted from all this exploration in the Canadian diamond business has been an unbelievable explosion of information or increase in the availability of public information on diamond exploration techniques, kimberlite geology, and diamonds. In 1993, Pat Sheehan organized a short course on diamond exploration at the PDAC, maybe the first of its kind. Before that, there was very little in the public domain about diamond exploration and diamond exploration techniques. She managed to get a lot of high-profile diamond speakers from throughout the world, and the talks went well into the evening with very few of the speakers adhering to time limits. That was my first PDAC, and I thought it was crazy. I thought it was like the Wild West. At about 8 p.m., they wheeled out a bunch of kegs of beer, and everyone just networked into the wee hours. Seemed like every Canadian wanted to be a diamond geologist. And also something else that came with the Canadian diamond rush is the need for public disclosure of your work, because of stock exchange rules and promotion. You know, exploration companies issue press releases and technical reports, and they have to file assessment reports with exploration data from their claims. And there's just an unbelievable amount of data available for Canada now. Too much. There's been tremendous capacity building as a result of the Canadian diamond business. Many people have gotten work experience and been trained. Geologists, cooks, mining engineers, pilots, labs specializing in diamond work, just to name a few. Another thing that's come from the Canadian diamond business is an unbelievable amount of research into diamonds and kimberlites by government agencies, geological surveys, and universities. Just two examples of the universities, and there are many more. At the University of Alberta, since 2014, there have been 19 MSc and PhD completed related to diamonds or kimberlites. Right now, there's 11 graduate students. At UBC over the last 25 years, 24 MSCs and 5 PhDs and 5 current graduate students. And all this information is related to kimberlite clusters, detailed research on tectonics or anything, stuff that is really related and can be used by diamond explorers. I think the thing that the industry can really be most proud of is all the benefits that have been provided to communities. And these are benefits that they would not otherwise have. In 2016, the NWT and Nunavut Chamber of Mines estimated that there was 3,761 person years of employment in 2016 related to the diamond mines and associated business. And 21% of that were Indigenous people. They estimated $1.4 billion in business spending, with 23% of that going to Indigenous businesses. There were 11 million of community benefits through impact benefit agreements, including 390,000 in scholarships. They estimate between 96 and 2016, there's been 18.7 billion in business spending related to the diamond mines, and all the taxes, related business, tourism, everything else. The NWT really needs to keep this gravy train rolling. This is a graph that Bain & Company puts out every year, and this is from their 2019 diamond report. It shows It shows historical and future estimations for diamond supply and diamond demand. You have the value of diamond production in US billions of dollars on the y-axis and time on the x-axis. Projected demand is in red and diamond supply is in black. It's long been predicted that one of these years, diamond demand will start exceeding annual diamond production. And according to this graph, that could have started as early as 2020. US demand remained stable, the Chinese and Indian demand was increasing, and man-made diamonds are still less than 10% of market share. But COVID got in the way, and we'll talk about that in a minute. One thing to note is that about 50% of mined diamonds by volume are used in jewelry, and that's about 95% of the value of production. So because of COVID, 2020 has been a real tough year for the diamond business. It's possible that global diamond jewelry demand could fall 25% from 2019 levels due to COVID. But there are some bright spots on the horizon. De Beers and Alrosa report having some good sales in September. Rough prices on secondary market in India and elsewhere are starting to climb. Chai Tai Fook opened 257 stores in China in Q3, and they sell only natural diamonds. There's still middle-class population growth in India and China, and natural diamonds are more being differentiated from man-made to increase demand for natural diamonds. And the Natural Diamond Council has a generic ad budget of $100 million US this year, and their main target is the younger demographic to get them buying diamonds. This graph shows diamond price over the last year as documented by Paul Zimnisky, indexed to 100 a year ago. As predicted, diamond prices in late 2019 and early 2020 were starting to rise. 2020 was supposed to be a good year for diamonds, but when COVID hit in January and February, over the next couple months, diamond prices dropped over 10%. Now, both rough prices in dark gray and polished prices in light gray are starting to climb. Rough prices have increased 7.1% over the last 6 months. So trends are looking good. Prices seem to be going up, but we do have a new COVID wave upon us, and we'll see how that affects things. This graph summarizes supply. It's hard to believe in 2006, there was almost 180 million carats of diamond production in the world. 2019, there was about 140 million. These blue graphs, the dash graphs, shows predicted supply decrease before COVID, and this dark blue solid line shows predictions taking into account COVID. It's predicted that this year there will be about 113 million carats of diamonds produced, mostly because some diamond mines have closed because of COVID. Argyle, which produced 865 million carats of diamonds since 1985, closed November 3rd. So that's going to have an impact on supply. Argyle produced 12 million carats in 2019. One thing to remember when you're looking at supply, it's not just production. It's estimated that Alrosa has about a 20 million carat inventory because they've been holding some diamonds back. De Beers, 11 million carats. So that inventory will have to flush through the system before we see the full effects of demand exceeding supply. Where could new supply come from? There's really only two major places right now in the world where significant supply can come from: Luash in Angola and Marange in Zimbabwe. Luash started trial mining this year, and they'll probably be producing 1 million carats a year for a few years. And if they're able to get to full production in 5 or 7 years, 8 million carats a year. At Marange, they're investing $400 million over the next couple years, and they hope to be producing 10 million carats a year by 2022. They only produced 3.2 million carats in 2018 and 1.6 million in 29. So that could be a big increase, but it's going to be a complicated type of mining. They're now going to conglomerates, which could present some problems. So we'll see how they do. And there are 6 undeveloped resources in Canada, publicly declared. If all of those resources were developed, and I'm sure many of them will be, that would result in 160 million carats of production. The first of those is Chidliak in Nunavut. Chidliak was discovered by Peregrine in 2008 with an assist from BHP, and De Beers acquired it in 2018. There's an estimated 22 million carats in 2 pipes, and the flagship pipe, CH6, has some really nice diamonds, as you can see in this photograph. The value given to those diamonds in 2016 was $175 a carat. Fort Alicorn in Saskatchewan lists 66 million of carats in 2 pipes, and they project a 38-year mine life. Rio Tinto has entered into a joint venture to earn 60% on the project, and they've spent over $100 million on evaluating the pipes since 2017. Unfortunately, there's currently litigation between the parties, and I'm hoping they can sort that out. Naujaat in Nunavut lists 26 million carats in an inferred resource. Naujaat was discovered in the early 2000s by BHP, and now it's owned by North Arrow Minerals, and they have a 40% option to Burgundy Diamond Mines, who's committed to collect a $5.6 million bulk sample in 2021. Naujaat has a real unique population of nice yellow diamonds, and the goal of that bulk sample is going to be to try to further flush out and clarify that diamond population. At Kennedy North, which is 10 kilometers from the Gaucho Quay mill, Mountain Province has declared a 24 million carat resource. It's worth noting that Mountain Province owns 49% of that mill. DO-27 in the NWT is one of the more famous kimberlites in Canadian lore. It was discovered in the early 90s by Kennecott. Kennecott moved pretty quick and went to an underground bulk sample, and there was much anticipation about the results of that bulk sample. They reported the results in 1994, and they didn't meet investors' expectations. So diamond stock, the value of diamond stocks across the board plummeted in 1994 because of those results. Peregrine Diamonds took over the project, and from 2005 to 2007, they did some bulk sampling and got 2,000 more carats in addition to the 1,000 carats that Kennecott had recovered. They defined an 18 million carat indicated resource, and the project is now owned by De Beers, Archon, and 2 other companies. And finally, there's Kahuna, owned by Kodiak Copper in Nunavut. There's 4 million carat resource in 1 dike. Now, a little bit about man-made diamonds, because you are hearing a lot about them. Currently, it's estimated that there's about 5 to 7 million carats a year of man-made diamond production that's used for jewelry. That's a little less than 10% of the diamonds used in jewelry. About 60 million carats of natural diamonds in 2019 go into jewelry. So the growth rate of man-made diamond production is estimated at 20% a year. That would be about 1 million carats a year, and that annual increase of man-made diamonds more or less right now corresponds with the annual increase overall in demand for diamonds for jewelry. A big event in the man-made diamond business is Lightbox, the De Beers man-made diamond subsidiary. They just opened a big facility in Portland, Oregon in October, and soon they expect to be producing 200,000 carats of man-made diamonds a year. One of the things that De Beers and others are trying to do is really clearly differentiate between man-made and natural diamonds in an effort to increase demand for natural diamonds, to emphasize how much better natural diamonds are. Okay, just as an example, a 1.5 carat natural diamond in 2016 was valued at about $12,100. The same man-made diamond about $10,000. In 2020, the natural diamond is still more or less the same price, but the value of the man-made diamond has gone down to $3,810. So the industry's hoping that man-made diamonds getting cheaper are not going to increase the demand for man-made jewelry. It'll just further emphasize the quality of natural diamonds. So now I'm going to talk about diamond explorations and some of the challenges and opportunities that we face. Really, diamond exploration is down a lot worldwide. And really the two main big picture challenges are that it's tough to raise capital right now, okay? And there's been a lack of news. There have really been no big new discoveries for quite a while that would excite the market. Now there's limited investment opportunities. There's not a lot of people doing diamond exploration that would give investors a chance to invest. In 2000, there were probably 100 juniors with diamond exploration interests throughout the world. So a lot of investors have just lost interest because of the lack of news and excitement. Most value and excitement with a diamond discovery is created with a new discovery, and there have been no recent large discoveries. The last two significant Canadian resource discoveries were Chidliak in 2008 and Renard in 2001. Luash in Angola is supposed to have been discovered in 2013, but there's really no way for an investor to get involved with that. Another thing is that, though long predicted, the gulf between supply and demand has yet to materialize, so it's keeping prices down. And there's some uncertainty with the public regarding man-made diamonds. You've probably heard a lot of the ads on the radio and TV. There's been some aggressive ad campaigns by the man-made industry to imply that they are cleaner or greener than diamonds that are mined. Industry now is working to dispel that. First off, diamond mining is one of the cleanest types of mining there is. And diamond mining has produced great benefits, especially in places like the NWT in Botswana. So I think as an industry, we really need to emphasize all the good that's come from diamond mining. Another challenge that diamond explorers face, or people trying to raise money for diamond exploration, is a perception that it's just difficult, if not impossible, to get an accurate diamond price estimate at the feasibility stage, which helps you determine the rock value in your feasibility study. Two recent high-profile Canadian examples illustrate that point. At Gaucho Cuea, De Beers Mountain Province mine, the Mountain Province feasibility study predicted a diamond value of US $118 a carat. Q1 19, that value was US $71 a carat. At Renard in Quebec, the feasibility study predicted $155 a carat. Q1 19, they achieved $83 a carat. Now, there's a number of reasons for this shortfall. One of them clearly is soft diamond prices. Diamond prices just haven't increased lately, and there was always a projection they would increase a certain percentage every year. Another possibility is diamond breakage, especially at Renard. But a big part of it, I think, has been inaccurate price forecasting. We all know how difficult it is to try to predict the revenue you'll get at a diamond mine from millions of carats from a bulk sample of only 5,000 to 10,000 carats, which is typically the size of a bulk sample in a feasibility study. Many factors in a feasibility study go in to predicting the diamond price. Geology models, different phases of kimberlites can have different diamond populations and different values. Bulk sample size, and importantly, how do you divide up your diamonds? Do you just throw them all together, or do you separate them by phase and value them that way? Now, the really important thing is understanding the end market for your goods so that you can get, both in your feasibility study, but more importantly at production, get the optimum price for your diamonds. And statistical price models are difficult. They have to model the average size, the amount of big diamonds at production and the value of diamonds at production, just based on very few diamonds. And now just a shameless plug for the 2022 PDAC Diamond Session. It's going to be devoted to diamond pricing at the feasibility stage, and we've already lined up a couple of good speakers. Another positive thing for diamond exploration is recent diamond industry investments are a good sign. A number of big investments by major companies show confidence in the long-term value of the diamond business. 2017, Rio Tinto and their JV with Star Diamonds has spent over $100 million to evaluate the $4 corn project. In 2018, De Beers purchased Peregrine Diamonds for $107 million, principally for the 22 million carats at Chidliak. Alrosa and Andiama are committed to trial mining and full mining at Luash in Angola. At Marangi in Zimbabwe, over the next couple of years, they're investing US $400 million to ramp up production. De Beers plans multi-billion-dollar investments in expansions at Arapa and Jwaneng in Botswana. And another thing, in 2020, EHR Resources, who is now Burgundy Diamond Mines, did an IPO and raised 10.6 million Australian dollars in August. They're a diamond project incubator, and they have investments in 3 projects: Nauyat in Nunavut, and grassroots exploration in Botswana and northern Quebec. Also, better diamond market performance in the future will stimulate exploration because the world clearly requires new diamond supply. There will be some pent-up demand and reduced supply after COVID because people haven't been going out and a lot of the mines have closed temporarily. This could lead to higher demand and higher prices. Also, there's a lot less luxury travel right now. Maybe in lieu of travel, people will buy a few more diamonds. Also, once we all get vaccinated and get COVID behind us, maybe people will be in such a good mood that they'll go out and buy a bunch more diamonds. Diamond jewelry purchases are based on emotion, and how can you beat a natural diamond? De Beers and other companies are working hard to emphasize the difference between man-made and natural diamonds, stimulate the natural diamond demand. Another thing that's positive for natural diamonds is the evolution of blockchain technology, which now allows you to see the provenance of your diamond right from the mine, which adds to the mystique and aura of a natural diamond. Clearly, a great new discovery somewhere will stimulate more diamond exploration, I think. Nobody thought the craziness that came from the 1991 discovery in the NWT would happen, and I think a new big discovery would stimulate a lot of activity and a lot of interest. But the easy ones, they've been found. A whole generation of diamond explorers was trained with, quote, Lac de Gras methods, which were used in the NWT barren lands. Basically, Lac de Gras methods were go into areas without trees, collect till samples by helicopter, either on a grid or in lines perpendicular to ice movement, interpret the quaternary geology, develop a diamond train, or develop an indicator mineral train, and that indicator mineral train leads you back to a source area. You fly that source area with airborne geophysics and drill the bullseye anomalies. Easy. And really, in retrospect, when you look back on all the success, it was pretty easy. And I think one of the real contributors to the success for all the exploration in Canada, if you look at it, most of the discoveries were north of the tree line. That allowed geologists to use helicopters and do very efficient exploration. Crews would go out and collect 10 to 30 samples a day, get into the trees, and you can't land a helicopter everywhere you want. Till sampling in Alberta, you're lucky to get 100 or a couple hundred meters away from where you want to work. So is there a coincidence between all the discovery in areas without trees? Maybe. As far as I know, there have only been 2 kimberlite districts discovered in Canada with geophysics as the primary exploration method. Alberta and Fort Alacorn. You can correct me if I'm wrong on that. So we now need to start looking at more complex areas with new geophysical technology and new ideas on glacial and fluvial systems and indicator mineral sampling methods. Indicator mineral interpretation has to go beyond G10 garnets. G10 garnets are what we all used in the Lac de Gras region and everywhere else, and they were wonderful. They easily led us to these nice diamond deposits. But there's a lot more. We're learning a lot more about laherzolitic diamonds, eclogitic diamonds, super deep diamonds. And these aren't necessarily associated with G10 garnets or Harzburgitic garnets. Also, ilmenite chemistry can tell you a lot about a region and kimberlite provinces. Another thing to think about is, why are there no lamproites in Canada? Is that possible? One of the things to keep in mind is in the US, all the lamproites are in areas of outcrop or very shallow cover. Also, lamproites don't give off the traditional indicator minerals signature. You got to focus on chromites. Are there lamproites in Canada? New ideas on basement terrains and basement tectonics are starting to suggest that maybe there's good diamond exploration potential off of traditional Archean cratons. A lot of research recently has shown some younger diamond ages, specifically 700 million years at the Victor Kimberlite in Ontario. That's a lot of food for thought for tectonic regimes and exploration targeting. Another thing that I think would have great promise if it could ever be done would be to try to identify either kimberlite districts or individual kimberlites that have a population of large high value or type 2 or super deep diamonds. The Karowe mine in Botswana has really shown us the dramatic impact that these diamonds can have on the economics of a mine, but you almost have to get to large bulk samples or mining before you find they're there. Is there a way to detect them at the exploration stage, or maybe at the early bulk sampling stage? A month ago at the kimberlite cluster, Margot Regier, gave a talk on super deep diamonds, and she speculated on research that could help lead to that in the future. One of the things she mentions was hafnium neodymium isotopes of ground mass minerals in kimberlite. So that's an area where, God forbid, if we could identify kimberlites with type 2 diamonds earlier, it could be really big. Okay, finally, I think it's a great time to be exploring for diamonds. Less exploration means less competition and more opportunities for those of us that are fortunate enough to be exploring. One of the things we may have to look at is new ways of raising money. Again, the real value is created with a new discovery, but right now markets don't have the patience to support grassroots exploration, which is what you have to do to make a new discovery. Maybe exploring as a private company is a better option. You have less overhead, and critically, you're better able to maintain confidentiality on your activities because public companies have to disclose what they're doing. And if you get the right shareholders, they support prudent exploration. Then you make a big discovery, you consider going public and setting the markets on fire. That's what I'm doing. I have a private exploration company called Kraton Minerals, and we've managed to raise $1.2 million to put a few of our exploration ideas to work. And we have 12 shareholders and hoping to get more. So to wrap up, I've been exploring for diamonds in North America since 1982, and it's been a wild and interesting ride. And I think there's a lot more opportunity to discover another district or two, and I'm hoping I can be part of that. And one of the things I'm thankful for is because of the Canadian Diamond Rush, there are so many people out there with the skills that can do what needs to be done to find the next district. Go back to 1993 and Pat's PDAC Diamond Exploration Short Course. Everybody wanted to be a diamond geologist, but they didn't know what the heck was going on. So today, got hundreds of people that know what to do. So that's it, and thank you very much.
Thank you, Brooke. So what I'll ask you to keep your screen shared, please, and I'll ask participants to raise their hands if they want to ask questions. So it's under participants. You'll have that button there. If you want to speak and go ahead and ask questions, please do so. And also, if you want, you can open the chat room and type in the question there if you're reluctant to speak.
Can I say 2 words? I don't know. I don't know how to raise my hand. So
yeah, is it you, Alexandrina?
yeah, it's me, okay. Alexandrina. Yes.
Okay.
I liked very much your presentation, Brooke. I mean, I missed a lot of things because I would say I'm still new in kimberlites, okay? Even if I've been working for 10 years already. It was an excellent review. Thank you very much. And you know what? I like very much your optimistic perspective. Because this COVID year killed us, and you know it was really difficult, and I really enjoyed the presentation. Really, thank you very much.
You know, especially your company that's really dependent on selling diamonds. It's been a really tough year. Some of us have been fortunate enough to be able to sit back and study some things, and maybe even be fortunate to have a little bit of a break and look into things you might not have otherwise looked into. But in general, it's been a really tough year. And it wasn't easy for diamond explorers before COVID hit. So.
Yeah. Well, hope it's gonna end soon.
I have a question sent to me over chat. What was the projected high demand in 2020 is based upon?
It was initially going to be, I think, or you mean supply?
Projected high demand, yeah, so a high demand for diamonds.
It, roughly translated to supply, which before COVID was going to be 135 or 140 million carats. Demand was projected to be more or less that, maybe the same, but some inventory from the major diamond producers might have kept prices down a little bit. But at some point in 2020, it was predicted that, demand would more or less equal supply, which would be, I don't know what that is in billions of dollars, but it should have been 135 or 140 million carats this year, but it's going to be 113 million. I don't know if that answers the question.
Well, yeah, I guess, yeah. I still don't have any raised hands, so it might be some problem with the software. So please, just.
Eric Friedland has a question.
Yeah,
Yes.
Brooke, how you doing, man?
Good.
When are you gonna come up and do some skiing?
One of these days.
Okay, good. I'm waiting for you. I had some questions about your numbers you got for Lightbox. You got valuations for Lightbox diamonds. Where did you find that information?
That's in Paul Zimnis. I'm not sure if those man-made diamonds were Lightbox. Certainly in 2016, it wouldn't have been. Okay.
Probably not.
That is Paul Zimnisky every month publishes a diamond newsletter, and that's
Right.
from his December newsletter. And I think he has some data. I don't know where his data come from, but I think it's a number of sources, and I'm not sure it's Lightbox.
Yeah, it'd be interesting to see because, as you know, Lightbox, the amount of production going up to 200,000 carats per year to start, and then moving forward, and especially since they're doing pinks and blues and yellows, they want to get a more dominant share of the market at this point, and they're promoting it quite heavily. The diamonds are very nice. I don't know if you ever bought one, but they're deep flawless. In fact, the whites I've never seen blue whites like that, and as a natural stone. They're absolutely spectacular. That seems to be a big headwind for the diamond industry going forward, I think, especially with the younger generation. What are your thoughts on that?
It's a headwind, but it's going to take a long time before they can ramp up to the levels to eliminate natural diamonds. And I really think that natural diamonds just have a special allure. And when De Beers initially launched Lightbox and jumped in with both feet into the man-made diamond business, a lot of people said they're giving up. But I don't think that's why they're doing it. I think they're actually doing it to try to control it and somehow make the market for natural diamonds better. So a lot to shake out, Eric. But I think ultimately, like rubies and emeralds and a lot of other stones, there is still a lot of demand for the natural stone. And often the man-made stone, especially in those stones, brings people in initially to buy their first stone. But when they buy their second one, they want to buy a natural one. So
yeah, interesting.
As a diamond explorer, that's what I have to say. I'm optimistic that there's always going to be a market for natural.
A lot of conversations on this. There's two anecdotes. What we were negotiating with De Beers to sell Peregrine to them. In the last month of negotiation, when we had gone back and forth and we rejected their first offer and they sort of rejected our second, then they put out the announcement about Lightbox to really stick it to us. You remember that? About a month before we closed. And then when we got them after the closing, we talked to the guys, their full management team came in, and we asked them, so how cheaply can you produce a carat ultimately? And they could produce carats down to around $8, $9 a carat. They could actually make a flawless, perfect stone. So that seems to be the big, you know, in my opinion, the big headwind, depending on how they market. But yeah, I do agree. It's a stepping stone, hopefully, for some people to trade up from man-made to a natural stone. But when you see these man-made lightbox stones, they are quite impressive.
Well, Eric, put your money for where your mouth is. Get a big man-made diamond necklace just to stimulate other people to buy.
No, we're talking about technology to make a bigger stone, because they're stuck at a carat or less at this point, and there's a lot of cost to move up
For
from
really good diamonds. Yeah.
No, that's all I'm talking about. They're all, you know, super high quality. These are all flawless stones, no matter what the color is. Their pinks are not vivid pinks, but they're going to get there. And ultimately, they said they'll color any color you want. You can even bring them a color, and they'll match it. So they're trying to make, you know, bespoke type diamonds for people that want something very special and unique. But the reason I'm jumping in here is give me a call sometime. I want to talk to you about another technology that may be coming forward to make a bigger diamond. And maybe we should spend more of our efforts making diamonds in our kitchen than going out to the Northwest Territories looking for them again. That was expensive and cold.
But it's a lot funner going up to the Northwest Territories. I spend enough time in my kitchen.
Especially with you, buddy. Good. Hey, that was a great presentation, Brooke. Thank you.
Eric, Herman here. Can I chip in?
Herman! Oh my God. All my old mates are coming from, do we all have to go on Zoom to meet each other again?
Yeah.
Go ahead, Herman.
Look, nice talk, Brooke. I particularly like your emphasis on that 1993 short course. If I can give anybody any advice, is to get hold of that short course volume. There's an amazing amount of material distilled in that volume, and I used it very extensively throughout my whole career. I still use it. It's
It was amazing, Herman, that there were 30, 40-page papers. The proceedings was like a phone book.
Yeah.
There were 30, 40-page papers in it. You know, it was
very few people realize that. So kudos for advertising that. It's an amazing achievement by Pat and getting all those people in the room. It was a moment in Canadian diamond exploration history that very few people actually celebrate, and they should.
Yeah.
But what I wanted to say about...
Go ahead, Herman.
Sorry, go respond, Brooke.
Yeah, all I can say, at the time I was doing diamond exploration down in the United States, and we just tried to keep a low profile, and I didn't network with any other diamond explorers. I was keeping quiet, and I went up to the PDAC, and I was just amazed at how wild and open all the Canadians were and talking about diamonds. Everybody wanting to get a piece of the action. I just thought it was great.
Yeah.
Yeah.
So just on Lightbox, Eric, look, if Lightbox sells $800 a carat plus a little bit extra for the gold or silver that goes with it. 200,000 carats is $160 million in revenue at $800 a carat. The largest stone that I've seen on Lightbox was actually 1.5 carats.
Oh, they had 1.5.
I know they have the technology to produce much bigger diamonds. They can do that tomorrow if they want to. I am in the market to buy a particular Lightbox diamond, which was there very early on and is now not available anymore. It's a pink, and it's cut. It's a Marquise cut pink, and they offered them. They were 1.25 carats. They were only available at the early launch, and I didn't buy some. I was an absolute fool not to. Those are incredible diamonds. There is a market for them, but De Beers is controlling that market in a very big way.
No, I agree. I bought 2 pinks for my daughter, and they were just spectacular, and a clear also for her for her birthday, and it was the best clear I've ever seen. It was a blue white. I mean, it actually threw off a blue color in sunlight.
Those are actually imitations of a Russian technology that the Russians put out something called silver bears.
Mm.
And the blue white that De Beers currently sells is very similar to the silver bear.
Yeah.
But the point I want to make about where De Beers is going with Lightbox is what De Beers recently did for Petra. De Beers paid $40 million for 5 pieces of natural blue type 2A diamond. It's a recent transaction,
Mm.
and it tells you about the nature of the way De Beers is investing their money.
Mm.
They're investing in high-end natural goods because that's a product that they're always going to sustain.
For sure.
And they have a window on these cheaper but very, very good quality goods that they will control because their natural interest is in their natural mines like Zwaneng and Orapa that produce nice diamonds.
Yeah.
And so it's a self-interested operation, and I don't think there's a threat. Lightbox isn't a threat. It's a window. And I think it's a window of opportunity.
Mm. Depends on, I think it depends on which audience you're trying to target. Like I asked my daughter, would you spend this kind of money for a new phone or for a watch or a trip or a diamond? She said, of course, phone came first, but she loves the diamonds. But I think that her group, maybe the ages between whoever can afford them, 20 to 35, 20 to 40, it's hard pressed to find those quality of diamonds at that price, especially when you just get them reset. Nobody knows the difference unless you're going to bring them into a specialist, and even then they have difficulties telling the difference. So at first I remember Brooke, you and I, we were talking, and Herman, we were talking about this stuff for hours over beers, whether or not there's going to be really a major impact from these man-made stones. But I'm beginning to sense there's going to be a bigger impact than we might imagine, and I think De Beers really is in the driver's seat. First off, building these factories, the second one now. Well, the first factory that they own directly, but it is a big one in Portland, Oregon. But the fact that they have that such incredible depth in marketing, and if they can get maybe 2, 3, 4% of their buyers to eventually trade up and buy a bigger natural stone, that's all well and good. But I don't know. I think this is going to be much more of an impact. And once you hold one of these diamonds, Brooke and Herman, should you get one and put it in your hand and look at it closely under a loop, ooh, they're sweet.
No, they're definitely, they're good stones. And the question is, once your daughter has her phone, what is she going to want next?
Boyfriend.
And that boyfriend, if he gives her a man-made diamond, he may not be long for this world.
No, I don't think so. I don't know. She's not the kind that's going to go check it out. Maybe she will. I don't know. Good talk, Brooke. That's great. It really is a walk down memory lane.
We have a question from Peter. Peter, please unmute yourself and go ahead.
Hi, Brooke. It's Peter Ravenscroft down in Western Australia.
Peter,
I echo the previous comments. That was a fantastic talk, and I haven't seen such a comprehensive compilation of history for a long time. Wonderful. And I just wanted to congratulate you on being positive about the diamond outlook. We certainly are in Burgundy diamond mines, and what we're finding is a lot of people are starting to believe the story. So, I listened in on the comment, the previous conversation about man-made diamonds. Man-made diamonds will be whatever they will be, but the future is in real natural diamonds, and that's where we're all going. So thanks a lot, Brooke. Good to talk to you.
I was wondering if any of the Northwest Territory mine mills are going to be changing their operations like Botswana did to allow for larger diamonds, or is it the assumption that the Northwest mining properties will not produce larger diamonds?
Sorry, could you repeat that question, please? I didn't get I switched screens and I didn't.
Well, Botswana changed the way they sort their diamonds in terms of, through the process, once the raw ore has been milled, to allow for finding larger stones, which is not something most diamond mining operations have done. And as a result of that, they've actually been able to find more larger stones than they were before. So, but they already knew there were larger stones to be found. The question is there a chance that the Northern Canada operations will be looking at that as a model, or is it already assumed that there are no larger stones to be found in the Arctic diamond fields?
No, I don't really know. I know when you discover a kimberlite and you collect bulk samples right from the very beginning, there's always a discussion about the optimum screen size at the mine, and you know, what's this, you know, what's the smallest diamond you'll crush, basically, is what the discussion always is. And I'm you know, you're basically talking about XRT technology, which is used so well in Botswana, and I think it's starting to be used elsewhere. And I'm sure that you know, Peter, I don't know if you can comment, but I'm sure at Akati and Diavik, they have looked into XRT technology. I just don't know if it could require, you know, some capital expenditures and a alteration of production, but I don't really know if they have. I don't think they've started using that technology. I know they're always adjusting their screen sizes, but can't say for sure.
I think the largest stone that I've heard of from the Arctic so far is around 30 carats.
No, there have been a few other ones that are quite, you know, 100 carats, 87 carats. Herman, you probably know all the.
Yeah, there's a yellow egg from Diavik that's over 200 carats.
But they're almost accidents. All of those big diamonds that they recover technically should have been crushed. They just managed to make their way through. They accept, I know all the studies they did early on, they kind of accepted that they're going to be breaking a lot of big diamonds. Is that correct, Herman? Yeah. So.
I won't say, look, Brooke,
Yeah, the biggest diamond from Diavik was Foxfire, 187.7 carat. That's a big boy.
That would be the biggest gem. They're probably recovering slightly bigger stones that aren't gem quality. I know I saw a 200 carater when I was in Antwerp that came out of Diavik, and it was black and
Sorry,
ugly.
no, you're right. Then the largest one of Diavik is a yellow 552 carat stone.
yeah, it's a yellow egg.
Yeah, it's a yellow egg, 552 carats. So big.
And I think they just see that on the belt, don't they? Like they do their first big crush, and I mean, I can't imagine it making it through the normal process.
I have a question in the chat from John Kaiser. John, do you want to unmute yourself and ask it in person? Can you do that? Go ahead and ask if you can. If not, I'll just...
Have I unmuted?
Yeah, you're unmuted. Yes, go ahead and ask your question. Yeah.
Okay, Brooke. Canadian exploration has been sort of grade focused with emphasis on microdiamond analysis to predict grade potential. I'm looking at the pyrope or eclogitic chemistry as an indicator, but super deep diamonds do not have any such associated chemistry. And there's a lot of these kimberlites bodies in Canada that are interesting in either microdiamond potential or in chemistry potential. Do these super deep diamonds follow a log normal distribution, even though you get these 200 carat plus sizes? And if not, is there any way we can reassess all these known bodies in these sort of not perfectly middle of the craton center without brute force bulk sampling?
You know, John, those are two excellent questions. The first about chemistry to try to detect super deep diamonds. I see Graham Pearson is on. I don't know if I could ask him to step in, but the second question about size distribution of these type 2 diamonds, I really don't know. If John Armstrong were on the call, he could probably tell us. I don't really, Herman, I don't know. Have you ever heard anything about size distribution of type 2 diamonds?
Yeah, only that if the best public domain data is actually for Karowe. You have to do some inferences in interpolating what is in their NI 43-101 report that was written by JDS. You know, it's not clear that you can relate those large diamonds as a population to the type 1 diamonds that the industry produces 98% of by volume, right? So there's 2% in the industry that is of this large diamonds. and it's not clear that you can relate the one to the other. Given that it's a completely different paragenesis, I wouldn't expect you to be able to do that. So it's a whole new round of evaluation that is a separate animal all of its own, as far as I can see.
John, you bring up such a good point. You discover a kimberlite. The normal process is you take, first sample 5, 10, 20 tons, and by then you feel like you've got a really good handle on the microdiamonds, and you look at the chemistry of the indicator minerals, and if is it possible that there's a few kimberlites sitting out there that really had low microdiamond counts, poor chemistry, but they could have enough 100 carat type 2 diamonds to be economic? I think that's what you're kind of saying, right?
Yeah, I'm thinking of what these RJK group is doing south of Cobalt, where the Nipissing diamond was found, and its source has never been explained, and they're finding all these bodies that have never been properly assessed, and that whole area has never yielded a meaningful grade kimberlite of any sort. And yet even De Beers has been revisiting that area for unexplained reasons. And I'm just wondering if the next phase of Canadian diamond exploration is going to be the attempt to track down those bodies which might have a hidden type 2A diamond population that doesn't lend itself to your usual microdiamond analysis or chemistry.
John, I think a lot of people are thinking about that. And I think it'd be even harder to try to think about how you could do it at the exploration stage in heavy mineral samples, detecting if you're in a province that might have type 2 diamonds. I think it's pretty difficult, but I'm sure people are going to keep thinking about it.
All right, thanks, Brooke.
I have another question sent to me over chat. The question is, how about South Africa? Is diamond exploration also reduced there? Can you comment on South African situation, please?
Can't really comment on the current level of activity, but I do know that it's mature. People have been exploring there for over 100 years in various forms, and there have been a number of waves, but I certainly haven't heard of any major programs by anybody or any major discoveries, and that's all I can really say. So I don't think there's a lot of activity, but I'm not sure.
Looks like we don't have any more questions, and thank you, Brooke. That presentation nicely completes our year 2020 for VKC, and thank you for our sponsors, CRK, and we're looking forward for continuation of the season in next year. And you may have noticed that Sophia, our manager of the last year, is not here anymore. So she left Canada and she successfully defended her thesis. And we have a new manager, Catherine Landoni. Catherine, wave your hand and show yourself. So Catherine will be helping us to run the VKC in the next year. And thanks a lot, Sophia, for all your work and all your service for the last year. And I wish everyone happy Christmas and good New Year. And whoever wants to stay, let's stay and chat and show yourself, have your cameras on, and if you want, we can be in the social chat for the next while. Oh, Sophia, yeah, hello. Thank you, Brooke, again.
Welcome. Yeah, it's been a lot of fun. The Canadian diamond business, it's just remarkable how it came about. That level of exploration, I don't think anybody could have envisioned that could happen. And then there was the exploration and all the discoveries. And at the time, I was sitting down in the United States and I said, but Jesus, those things are 300 kilometers from Yellowknife, farther from tidewater. They're covered by lakes. It's dark half the year and snow and ice and 40 below. I said, there's just no way they can develop those things. But the engineers just got right on it. and no problem, you know. I mean, just so quick from the first discovery to production at Ekati in less than 7 years. And a lot of people just said, that's crazy. They're not going to be able to build a diamond mine up there. But they did it without breaking a sweat, it almost seems like. I know they broke a lot of sweats because I know all the stories, but it's really remarkable, those accomplishments, and also all the benefits and all the, there wouldn't be a kimberlite cluster if it wasn't for all those discoveries, for sure, you know.
And you, Brooke, mentioned that short course volume from 1993, and Herman, you also said that that was a quite an accomplishment. I remember I've seen it from the other side. I was in the lab with Bill Griffin in 1993 in Iron Probe Lab, and he was preparing to go to Canada and present at that PDAC, and I was the witness how he was stressed about the presentation and what he can show to the new diamond professionals and all.
And what I remember, you know, I'd been exploring for diamonds for 10 years, so I think I kind of knew quite a bit about diamonds. And I go up this short course, and then you get people like Rory Moore and Herb Helmstedt and Howard Cooper Smith all up giving these talks. And I think they were supposed to be 20 minutes, but they all went for 45 minutes. And then you get all the Canadians in the crowd that are just mesmerized, but they don't know a thing about diamonds. And they're asking all these wild questions. And, you know, it just went on and on and on. And it was so interesting, all of it. And then afterwards, people drank beer for 3 hours, and everybody was looking at everybody else, wanting to know, who are you? What are you doing? Why are you here? You know, it was really a, to me, it's like Herman said, a seminal event in the Canadian diamond rush. It, you know, before that, you heard all these stories about Chuck Fipke putting electric currents out on his kimberlites to screw up people's geophysical surveys, and it was pretty cloak and dagger. But it seemed to me like after that exploration short course, all of a sudden people started networking and talking about what they were doing, and there were all the press releases and Northern Miner articles and all that stuff, you know. Pretty crazy. And I asked Pat Sheehan about it. I just sent her an email just wanting some details about it, and she said she organized that all by herself. When she started, she didn't even think it was going to be that big a deal, and then it, like, literally, if you went, you'll know there was not enough seats for everybody. They just had chairs. There was a whole bunch of tables and double the amount of chairs all around the room. It was oversubscribed, and she let everybody that wanted to register, and it was just crazy. Anyway.
Pat, I know that you're here. Do you hear us? Do you want to say something? How you organized that famous short course in '93?
Okay, I'm really grateful, and I enjoyed doing it, and I'm thankful to Brooke for commenting on it, and all of you. Yeah, no, it was wonderful. I think there were almost 450 people registered, and it went, as Brooke said, it went on till about 10 or 11. While they were drinking beer, there were still speakers. Okay,
Yeah, I think so.
Take care. Thank you.
You, Pat.
Now I got to figure out how to unmute or to mute me there.
And you know, in those short course notes, there were all kinds of graphs of chemistry and all that. There really hadn't been too well published. You know, there was just Bill Griffin talking about nickel thermometry, which was kind of a new thing to a lot of people at that time.
Actually, we had a Russian, Sobolev came, and he invited himself because I wouldn't have thought he would come, but he did. Yeah. And
Well, it's interesting, Brooke. Sorry, Pat.
Oh, hi, Barbara. I have the volume, and if somebody, where the abstracts are through University of Alberta, if they want to go ahead and it doesn't belong to PDAC, I don't think. I'll check with that. But you could possibly scan it and offer it to people if they want it.
Yeah, thank
Take
you.
care.
Thank you.
I interrupted Barbara, sorry.
That's all right. It's interesting, Brooke, because it was 1994, as you said in your talk, when Kennecott gave out the announcement on DO27. And I think that was around August, and there was a Vancouver short course planned around the same time, which was sort of a bit of a flop because, so that was 93, and then 94, this short course, I think it was here in Vancouver, just failed because everybody lost interest around that announcement. So it's amazing how it comes and goes.
I think a lot of people say that that was the day the diamond, I don't think exploration stocks ever even recovered to half the price they were before that. Everybody was just thinking, man, diamond exploration and mining is easy. Look, these guys just discover a kimberlite. Now they're going underground mining. The potential's unlimited. Everybody was buying stock, and anybody had moose pasture out there. And then those results came, and I'm sure it's documented somewhere, but the market just fell apart in a big way. It never got back to the levels it was before that.
Well, my memory is that it lost 2 billion. Does anybody know? Which is half of what Bre-X lost. And everybody talks about Bre-X, but nobody talks about that particular moment.
There's a good lesson in greed. You remember the DHK consortium that had DO27? Yeah. They were approached by Rio Tinto to sell out before those announcements were made. And they said no. And they would have been very, very wealthy people. So sometimes you take a little bit off the table. It's not a bad idea.
Bob Bishop is there. Do you have any memories of that, Bob? The Great Diamond crash?
I sure do, Brooke. Can you hear me?
Yeah, I can.
Okay. By the way, thank you. This was excellent, and I appreciate the invitation. I remember being in Aspen at a conference at that time and having to deal with the fallout and cobble together some commentary about it. It was the most unexpected result by so many people. And some of you may know who Jim Blanchard is. He had a conference in New Orleans. He started in the 70s, and Jim had a huge position in Dentonia. And he had a very long night that night as a result of it. I think the big thing about the Canadian story is that it really changed the world of diamonds. Prior to this, most of the world's diamond knowledge was within one company, and even within that company, it was well compartmentalized. People, they didn't share information well within De Beers. And this really represented the genie getting out of the bottle. I mean, that short course, I was at it, and it was just astonishing. It was just a completely different world after that event, because suddenly everybody was up on the learning curve, and that hadn't happened before. And the Canadian explorationists are the best in the world. So, the rest is history.
Does anybody remember what the grade was that Rio Tinto had published back then for their underground bulk sample?
0.3 carats per ton.
So another perfect example of Canadian exploration. You remember we took on DO27, we proved the grade was actually a carat per ton.
No, so, but the grade of 30 wasn't, well, yes. Anyway, they really sampled the sheets and not the pyroclastic kimberlite, which you very carefully determined was.
They didn't get into it. They didn't go deep enough, and they couldn't get into it, having caving issues. And they stopped without getting into the pyroclastic and announced 0.3 without doing a proper bulk sample.
Because the geological model was incorrect.
There you go.
I think another thing there is they became convinced that they were in a race to be first, that there was only room for one diamond mine. So I think Kennecott did some things that in hindsight were very ill-advised.
Couldn't happen to a nicer group.
Yeah,
that's the way the Northern Miner played it. It was almost like you were looking at horse racing sheets, every week. The race to the race to the first diamond mine. Who's going to win?
As all the people on this call know, there's no shortcuts in diamond exploration, and it's a lot more expensive and takes much longer and can go off the rails about 50 different ways, unlike most other commodities.
Yeah,
Boy,
when Kennecott went in there, they were running out of time with the winter road, and they ended up putting their decline in shallower than they had intended, and as you said, they didn't get into the part of the pipe they wanted to. And I think Howard can tell horror stories about the ground conditions, because I know Howard went underground there, and I think it was a pretty scary thing. And luckily, they stopped before there were any major accidents.
Remember the stories from Rod Davey, who used to be, president of Diavik, talking about that bulk sample and how, quote unquote, some stones went missing. There's a lot of mumbo jumbo going on back then, but that's a major mistake to go ahead and publicly get out there with that kind of grade without doing. I don't think they even twinned their core holes. They had core holes indicating a higher grade, and then they just relied on that underground bulk sample. I think only got 9 meters into the pipe or something. Just scratched the side of it.
This is Howard here. They actually knew where they needed to get, and they knew they didn't get there, even though they didn't understand the geology at all. They knew they didn't get to what they considered the high grade area, but they'd spent $30 million at that point, and nothing was going well, and they just decided to bail and publish these numbers. I think the overall part of the grade was 0.3, but the majority of the rock was like 0.01 carats per ton, and they just kind of made up anything they could to cover their asses.
Brooke, what was our on DO-27? Where do we end up with on the not the pre-fees, but the preliminary, the study before the pre-fees? We had what was our total tonnage? Like 18 million tons of a carat?
18 million carats, and I think it was like 0.95 carats per ton, so it was close. The tonnage and the carats were pretty close.
Yeah, actually 0.95 carats we came up with, and then it was modeled in the resources actually about 1 carat per ton. So
Howard was a co-author on the technical report with Jennifer, and I think, heck, I might have even been in on it too.
Hey, but DO-27 allowed us to raise the money that ultimately we found Chudliak with. So there you go. Never give up.
Right. So we got there anyways.
We got there.
I know.
One of my memories is that those grades were such a big disappointment because somebody had taken the microdiamonds and extrapolated up to a grade and was predicting that DO-27 would have a grade of 200 CPHT. And when they announced this, then it was such a disappointment. If it hadn't have been hyped up, it wouldn't have been noticed in the same way, is how I remember it.
Yeah, makes sense.
I think most people that were following it and getting excited about it wasn't necessarily the geology, the size distribution, anything. It was just the fact that Kennecott was going underground, that this must be serious. That's a lot of the people I talked at that time, they couldn't care less about the geology or the microdiamonds. It's like, look, Kennecott's might beat BHP to be the first diamond miner, and that was what a lot of people looked at as being really important,
And it was a good sized kimberlite body in surface area.
Yeah, I mean, it's large for the slave. There's no doubt about that.
And there's DO-18 too, which is a decent one next to it.
Right.
Maybe they'll all come around again.
I think one of the things with Kennecott was it was a combination of the grade being so much below what they anticipated, and then the valuation of the diamonds, and they figured they were never going to get into the ballpark they thought they needed to be.